Is it possible to secure financing for a MacBook without relying on an Apple Card? What alternative options exist for financing the purchase of a MacBook? Are there third-party financing programs or installment plans available? How do personal loans and credit cards come into play when considering MacBook financing? Let's explore the avenues for financing a MacBook beyond an Apple Card. Apple has always been an industry leader when it comes to both innovation and design. Despite the ever-changing landscape of consumer electronics, the launch of the iPhone payments program is a demonstration of the company's dedication to providing customers with a variety of convenient and easy-to-use payment alternatives for the acquisition of their highly desirable products. In this video, we delve into the complexities of the iPhone payments program, comparing it to several other financing options and providing helpful insights on how to make an educated decision when purchasing a MacBook. An exposition regarding the Apple iPhone payments program. The iPhone payments program is a financing solution that is geared toward customers who are interested in purchasing a MacBook without immediately shouldering the financial load of making the purchase. If payments are paid on time, participants in this program can take advantage of a payment plan that extends over a period of 24 months and features an appealing annual percentage rate of 0%. A credit score of at least 640 is a necessary condition for qualification as an applicant. Apple places a strong premium on being creditworthy and borrowing money in a responsible manner, and this criterion reflects that. You have the option of applying for the iPhone payments program either online or in person at an Apple store. Both of these methods are quick and easy to use. Customers are able to start the financing journey from the convenience of their own homes, thanks to the streamlined online application procedure. However, the in-store alternative gives a more personalized experience and access to help from industry professionals. Investigating other options. Financing through credit cards. In addition to the iPhone payments program, clients also have the option of financing their purchase of a MacBook through one of the major credit card issuers. It is necessary to be aware of the potential drawbacks associated with this approach, notwithstanding the possibility that it would result in more generous payback terms. When it comes to brand new purchases, many credit card providers provide introductory periods of 0% intro APR for a predetermined amount of time, which is typically somewhere around a year. Borrowers have the opportunity to make consistent headway toward the repayment of their loan during this period in which interest is not accrued on the balance. However, after the promotional period, the annual percentage rates on credit card loans could be greater. To qualify for this type of financing, prospective borrowers need to keep a good credit score, which highlights how important it is to manage one's credit responsibly. To investigate this possibility, one must contact the firm that issued their credit card in order to inquire about the financing arrangements they offer for the purchase of MacBooks. Third-party lenders. When navigating the broad labyrinth of available financing choices, one more potential option for purchasing a MacBook emerges in the form of third-party lenders. These creditors provide a variety of payback arrangements, some of which might last for as long as 60 months. People who want to reduce the amount they pay each month and spread their repayments out over a longer length of time may find that this prolonged period is particularly useful to their situation. On the other hand, it is essential to be aware that the annual percentage rates that third-party lenders may impose may be greater compared to those that credit card financing or Apple's iPhone payments program may impose. A high credit score is required in order to obtain advantageous conditions, the same as it was for the other available choices. Similar to other financing channels, the foundation of third-party lending rests upon the individual's creditworthiness. A robust credit score serves as a prerequisite for accessing favorable terms and conditions from these lenders. Lenders utilize credit scores as a metric of financial reliability, determining the borrower's likelihood to honor repayment commitments. A strong credit score, often surpassing a specific threshold, opens doors to more attractive APRs and repayment structures. For individuals contemplating third-party lending, embarking on diligent research and comprehensive comparison is paramount. Prospective borrowers are advised to delve into the intricacies of available options, scrutinizing interest rates, repayment models, and potential associated fees across various lenders. This meticulous evaluation empowers borrowers to make an informed decision aligned with their financial goals. The digital age offers a boon in the form of online platforms, where borrowers can explore the offerings of multiple third-party lenders in a centralized space. These platforms provide a streamlined process for comparing rates and terms, equipping borrowers with the tools to navigate the financing landscape with clarity and confidence. In the quest for an optimal third-party lending arrangement, two valuable resources emerge: online platforms and community credit unions. Online platforms consolidate a wealth of data, facilitating effortless comparison of rates, terms, and user feedback. This virtual marketplace simplifies the arduous task of sifting through numerous lenders, enabling borrowers to navigate the financial landscape with efficiency. Rent-to-own or lease programs. Renting or leasing a MacBook may not be the most cost-effective alternative in the long run, but it is a fantastic option for people who do not want to make a significant financial commitment right away and do not want to make a huge purchase. You have the option to buy a MacBook at the conclusion of a rent-to-own or lease agreement, at which point you will have made monthly payments toward the cost of renting the computer. Do your research before enrolling in one of these programs, because the interest rates that come with them are typically higher than the interest rates that come with other types of financing alternatives. Savings. The most ideal way to acquire a MacBook is, of course, to put money aside beforehand and pay cash for it. Although not everyone will be able to exercise this choice, doing so is an excellent approach to stay away from debt, as well as interest fees. You can either look for ways to lower your spending and increase your income in order to save money more rapidly, or you can set up a savings plan and have your contributions made automatically. Important things to take into account. Regardless of the kind of financing that an individual chooses, there is a set of responsible behaviors that can maximize the borrowing experience. Conducting research and making comparisons. Investigate the variations in interest rates, repayment terms, and fees offered by different lenders. Borrowers gain the ability to pick the most affordable and appropriate form of finance by conducting extensive studies. In the holistic assessment, it is important to avoid giving in to the temptation of choosing the easiest solution. Borrowers are able to determine the greatest deal that is in line with their monetary goals if they compare the interest rates and terms offered by a variety of lenders. Preparation of verification. During the application process, the majority of lenders need applicants to provide verification of their income as well as their credit history. Making sure that these documents are in order will make the process of obtaining financing simpler and will speed up approval. Affordability analysis. To avoid going overboard with your financial commitments, carefully evaluate whether or not the monthly payments are within your budget. Borrowers who engage in a thorough budgeting exercise are better able to commit to repayment without placing an undue burden on their resources. Facilitating the acquisition of MacBooks. Owning cutting-edge equipment does not have to be prohibitively expensive if one obtains financing for it through programs such as Apple's iPhone payments or through other channels. It is imperative to conduct in-depth research and make well-considered choices when selecting a method of financing, because each of the available options comes with its own distinct set of benefits and factors to take into account. Prospective MacBook owners can navigate the world of technology acquisition responsibly by embracing various financing avenues with thorough diligence and awareness. This ensures a harmonious blend of innovation and fiscal restraint. The world of owning a MacBook becomes more attainable and satisfying than it ever has been before because of the power of informed decisions. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.